On Point with Craig's Investment Partners.
The information provided here is general in nature. It's not financial advice. It doesn't take into account your financial situation, objectives, goals, or risk tolerance. All investments are subject to risks and none are guaranteed. So before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services in that regard, you can go to our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics, including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. The local reporting season ramps up this week, and I've got high hopes for a more optimistic tone. To be fair, the bar is very low. It's been a very difficult couple of years for most businesses. The economy has contracted for 7 out of the past 8 quarters on a per capita basis, with the other quarter being flat rather than up. So you've got to go back at least 2 years before you can find a quarter where the New Zealand economy grew. However, things are getting better. The official cash rate, the OCR, has fallen from a peak of 5.5% to 4.25%. That's a reduction of 1.25% within 6 months. And by Wednesday afternoon next week, it's expected to start with a 3. Business confidence has bounced to 10-year highs, and the Fonterra payout for this season will be the highest in history at $10 or maybe a little bit more than that. These positives won't be reflected in the earnings releases we see over the next few weeks, mind you, with most set to make for pretty sombre reading. Remember, these results will cover the 6 months to the end of December last year, and that was still a very challenging period for the economy, from July through to December. Outlook commentaries should be better though, and I'm very hopeful that some businesses are starting to see a pickup in activity. The share market rebounded strongly over the second half of last year, with the NZX 50 index up 11.9%. That was the strongest rise since 2020, and investors are clearly expecting this year to be a more buoyant one. Trading conditions should be stronger, pushing corporate earnings and dividends higher, while also boosting investor optimism. If that's the case, another year of solid gains should be on the cards. There'll be plenty to watch over the weeks ahead, with many of our largest listed corporates coming under the microscope and some of the real heavyweights set to announce results in the coming days. Fletcher Building, Sky City and Spark are some of the first up. They all report next week, and they'll be very closely watched after all three performed very poorly in 2024. As traditionally useful barometers of economic activity, Freightways and Port of Tauranga will be in focus. Freightways reports on Monday. Quarterly releases from Westpac and ANZ Bank across the Tasman will also offer additional insights into the state of play here in New Zealand. The A2 Milk Company made some great progress last year, while the NZX itself was a quietly impressive performer with a 44% return in 2024. A2 reports on Monday as well, just like Freightways. Investors will be monitoring these and some of the other stars of last year to see if their momentum can be maintained, with the likes of Infratil and Somerset still very highly favoured by the analyst community. There will be many others to watch through February and into early March too. The listed property sector is potentially nearing an inflection point, with interest rates coming down and tenants that should hopefully be in a stronger position in the months ahead. The big four electricity companies, long-time favourites of income-seeking investors, are likely to deliver a mixed bag of results. We had a dry winter last year, and that will have dented Meridian's earnings, although the company is still very well positioned, with a very good development pipeline and a stronger balance sheet than its peers. As for Contact, its results should look better, although investors are very focused on the Commerce Commission decision over its intended Manawa acquisition. To wrap up, the period that this reporting season will cover will end up being pretty close to the maximum pain point for our economy, the second half of last year, but there are still plenty of bright spots emerging. Investors should brace themselves for another batch of uninspiring results when it comes to the numbers, But I think we should put more emphasis on the encouraging comments we hope to hear about how this year is shaping up. Thanks for listening. We'll talk again soon.
For more insights, visit craigsip.com.